Hello and welcome to this tutorial. In this tutorial we will discuss the day trading strategy. I'll start off by showing you briefly about the configuration of the currency strength dashboard on the right hand side here, and then I'll show you some entries that we could take or could consider taking, and I'll give a few examples of how we would consider entering trades, and where we'd place our stops, take profits and manage the trades. Okay. If we start off with the currency strength information, as we can see here on the right, it's probably a good idea if you watch the currency strength analysis for day trading video. I'll provide a link to that here in the text just above this video. But we'll do a quick run through. So if we have a look here, we can see that we have our three currency strength windows. We have the long term, medium term and the short term. And the long term here, if we have a look, you can see here that we're looking at the past 1,440 minutes. So this is actually showing us what the strengths of the individual currencies have been doing over the course of the past 24 hours. And as you can see here that we have a very clear winner here, and this is the green line, which is the US dollar, which has showed some strength throughout the past 24 hours. And the loser here is the euro, and you can see here that it starts off initially yesterday at this time, which is about 8 o'clock in the morning London time now, and the price just sold off here over the past few hours and continued to do so until today, where we had a very big sell-off. You can see here that the pound had a bit of strength. It was pretty neutral, then it was strength, and it sold off this morning as a result of some key figures out of the UK. But this just gives us insight into what the currencies have been doing and how they have been performing over the course of the past 24 hours. We look at the middle one here. This shows us what the currencies have been doing over the past 4 hours. So you can see here that this portion of the chart here shows what Asia was doing, and this morning we had a very powerful sell-off on the euro, which we saw on the daily strength information, and now things are kind of moving sideways and beginning to consolidate as the session gets going. So this is the past 4 hours of trading. In the bottom here we have the past hour, and this gives us the here and now feel of what's going on. You can see here that here's the big sell-off on the euro this morning, where it sold off very aggressively and then continued to move lower. And now it's starting to pick up. You can see that the dollar has also been moving in its direction, which has been to the upside, so there's been some strength, and then it started to sell off here roughly the same time the euro started to be purchased. So the euro strength here could actually be the reason why the dollar is weakening here. But now things are moving sideways nicely as a session gets going here. Okay, so let's have a look here on the other side of the chart. Here we can see that we have our chart as we always have, and we have the three instances of the currency strength indicator, the same as these, but the configuration here, we want to display active currencies only. So again, active currencies says that it looks at this symbol, which is Euro USD, and it will only present the lines that represent either the euro or the dollar, so the euro being the blue and the dollar being the green. And again, we want to enable the static period to 1 minute, so we're looking at 1 minute data, and that's it. Then we're good to go. And again, this is the slower or the long-term strength reading, which is the past 1 day or 1440 minutes. And the next line, which is the medium thickness line, this is looking at the past 4 hours. And again, it's important to have the active currencies only enabled, as well as enable static period set to 1 minute. Then we have the short term here, which is showing us what's been going over the course of the past 1 hour, with the two settings here set to true. So what we want to do is we want to see initially what's been going on over the past 24 hours. If we have a quick look here and we focus on this, you can see that we've had some clear winners and some clear losers, but it's very important to remember that just because we have a currency that's strong and another one that's weak, that we don't want to buy the strong and sell the weak. We actually have to time this with the other information, which we'll get to in just a moment. But this gives us like an overall indication. As you can see here that the past 12 hours ago, the dollar started to sell off, and it sold off for quite some hours, for maybe 6 or 7 hours here. Then it started to pick up again here towards the open of the European session. But the euro here has been selling off rather aggressively throughout the course of the entire past 24 hours. So this is very interesting for us. And so you want to focus on the portion of the line where time currently is. So if we maybe zoom in a little bit here, what's going on here? Well, we can see that the pound is starting to pick up just a little bit here towards the end, and the yen is moving higher. The Kiwi is moving higher, The dollar is kind of flat. We have the Australian dollar, which is moving lower. So let's just get a notepad out and write these down. So we'll have a look here with the strong ones. So we have the Kiwi, we have the yen, we have the pound, and then we want the weak ones as well. And the weak ones are, we have the Australian dollar, and we have the Swiss franc is kind of sideways, turning to the downside here. It will put that on there just so we have something to look at. So we have that, and this is on the long term information. So then we go away from here, and then we look at this one here. This is what we want to filter using. So we'll bring this back up. Is the Kiwi dollar looking strong? Oh yes, it is. Slightly, you can see that it sold off very aggressively, and now it's kind of picking up here. So that's okay. We'll keep that. We have the Japanese yen. And this is kind of sideways for us, but it's not. It's certainly not weak. And if we combine the yen with a weaker currency like, for example, the CAD or the pound here, then things might begin to work out nicely for us. But what about the pound? Is this strong? No, it isn't. You can see that it's been selling off quite aggressively throughout the course of the current European session, so we'll remove that from the strong list. You can see the American dollar we had that on our watch list previously, but we'll just add it again because you can see here during the current session it's still strong. The weak currencies here, you can see I think we'll put the pound on those are one of the weak currencies, and we have the CAD as well. And I think we'll leave it at that. And the shorter term information here, we don't really want to consider too much. What we can do is we can just use this for verification purposes, but I think that things are looking quite okay. So if we just focus on these, we'll have a quick look just for good measure. You can see here that we have the New Zealand dollar, which is strong. Yes, it is. Kind of, a little bit. And we have the yen, which is a purple line, which is moving sideways. How's it been doing? Yeah, it's been moving up, then down, then moving along sideways, so that's okay. We have the dollar, which is moving up. And the pound, you can see this is nice. It was moving down, then it moved up, and then it's starting to sell off again. We have the CAD, which is selling off here as well. The euro, which is also beginning to sell off here. So I think we'll leave it at that. Perhaps begin to pair these. Okay, and so now we have created our pairs, and you can see that we have lots and lots of pairs to trade. Here we have 3, 6, 9, 12 pairs here we can trade. Do we want to trade them all? Absolutely not. We want to take all of them, look at all of them, and find the ones that look the best, and then we trade maybe 1 or 2 of the pairs. So let's start off, and we'll start off with the Australian dollar, New Zealand dollar. So if we find this one and we drag it onto the chart, and we'll enable the full screen so we can see what's going on. So selling the Aussie Kiwi. What does this look like? You can see that things have been consolidating over the past 5.5 days, and so this is not really going anywhere. So we might sell and then find out that price hits the bottom of this channel here, or this area of consolidation, and then go back up again. So this is perhaps not something that we want to do. So we'll put a minus just after it, just so we can see that this is not one of the best setups. So we go to the next one, the Kiwi Swiss franc. Well, how is this looking? Well, this is looking a little bit more interesting. You can see since yesterday, the low of yesterday, which is here, price has moved up quite strongly, which is nice. So this could be potentially interesting. So we'll add a plus to that one. Then we'll go to the pound Kiwi. And this one we want to sell. This is also looking nice. So we'll add a plus here. And the Kiwi CAD. This one we want to buy. This is also looking okay, so we'll add a plus there. We have the Aussie yen. And this one we want to sell. This is also looking quite interesting. We have price moved up, consolidated higher, made a new top, and then it's starting to break lower here. Now we're sitting at this area of consolidation here, which prices may or may not move through. Okay, the next one is the franc Japanese yen. As we find that one, drag it over here. You can see here that we want to sell. Yeah, this looks very nice. This is really nice for us because you can see we have very clear reaction points here. So this is a beautiful area to sell just in here. So this is most certainly a good one. So I'm going to actually move this one up here. And this is going to be the selected trade, and I'll put the selected trades, the really gorgeous ones, I'll put them at the top here. So now we look at the pound yen. Price really shot lower here. So you want to look at the rest of the market structure here, and you can see the price went up and formed a top here, and now it's breaking down. So this could possibly go lower. Also, we have the big gap here that needs to be filled, or should be filled at some stage, and we have a nice price inefficiency here which may be filled, and you can see price has already broken below this low here. So in the next area of reaction is around here and then around here. So this is interesting. So we'll move this one up as well. So this is the pound Japanese yen. So now we want to look at the CAD Japanese yen. This is also selling off very aggressively as well. So we'll add this one as well. We have the Australian dollar, US dollar for a sell. It's looking all right. We'll just merely put a plus there. I'll remove the minus ones here, and we'll leave the plus ones here because these are worth analyzing later. And we'll do this for all of the pairs. So now we have identified some good pairs to trade and some mediocre pairs to trade. So let's have a look at the good ones, because these are the ones that we want to trade. We want to find the best one or two out of these and focus on those. If we have a look at the franc Japanese yen, you can see here that we have like a decent level here, which is a 40 level, which is a round number. We have this very aggressive push lower, and then price was rejected and went up 20, 40, 60, 80, 90 pips higher at this level. So this is a very sensitive level here, and you can see here that when price came down to this level again later, it sat on it for a period of time before moving up about 30 pips, and then it broke through it. You can see here that if we look at the strength information, and you should be aware of the fact that this is a 1 minute strength information, so we're not looking at 1 hour information, despite the fact that we are on the 1 hour chart. And this is of course because that we have enabled the static period, which is set to 1 minute. So this is 1 minute. So this is telling us what's going on within this hourly candle. So if you go to the M1 chart here, you can see what's going on here. And so price has been dumped lower this morning, and now it's kind of slowly feeding into this price inefficiency here. So if we have a look at this trade, and let's assume that we think this is a great level. So you look here and you say 129.40. This could be of interest for us. So what do we want to do? Well, now we need to look for supply and demand levels and other levels which could provide some kind of resistance for us, which will push price lower. Before we do anything else, we have to zoom out perhaps to the 4-hour chart, and we have to make sure that there's room for an additional move lower. Because let's assume that this bottom was down here, and you can see that price may not have enough room to move any further lower because it has to move through this big thicket of price action. So we want to see something like this where we have a very strong and inefficient move higher. We can see here we have like a double top, and then price is slowly starting to break lower here. So there's a lot of room for a move lower here. As you can see here, we have this leg, a little bit of consolidation, so this could be a potential target area for us just here. And then we have another move which moves even lower, so price could react at anywhere between, let's put a shape in here, so we might get some reaction at around within this 100 pip area, and we may also get another reaction at around these tops here, and this is also 50 level, which is again good, so we may get a reaction anywhere in here. So we'll leave those on there, and we'll go to the 1 hour, and we'll say, okay, where would we want to sell this currency pair? Well, now we have to look for these levels here. You can see here that price moved down to this lower, which was qualified previously, and it sat on it. So we have a nice thicket of price here, which is very nice. And because we know that there's going to have to be quite a lot of buying pressure to move price through this area of supply. You can see here that this area here lines up very nicely with the 38% Fibonacci retracement, which is great. The 38% is good when you have very inefficient moves lower like this. Then we'll try from the high of today to the low, see if we have anything that lines up. And we do. We have the 78% lines up nicely with the same area, so this could potentially be a nice area for us to trade at. So we zoom in a little bit more, this is looking quite attractive to us. So next thing we want to do is we want to go in and we want to have a look at the news. Is anything going on that will affect the Swiss franc or the Japanese yen? So we'll have a look here. So today we've had some news out. The 19th. We can see here that we have some yen information coming out of Japan tomorrow morning, which is very heavy news, as you can see here, which is marked as red. So this is red flag information. And so ideally you want to have the risk out of the trade before this news comes out, because despite the fact that our currency strength says yes, we want to buy the yen, this could change that entirely. And so currency strength is useful when the news is not erratic. So when you don't have big flags, this could push anything up or down. It doesn't. Then the currency strength information doesn't really matter, because if it comes out higher or lower than the forecast, then this could send the yen both a lot higher or a lot lower. And so you have to make sure that there's no red flag events coming out before your trade. If price has managed to reach your entry and there are still a few hours until the news release, then the best thing to do is to take the risk out of the trade as quickly as possible. So we have the Swiss franc. Anything there? Well, there's nothing until tomorrow late morning. So this is looking okay. So let's assume that we sell here. Let's have a look at how we would do this. So we have qualified this level as our entry. We'll take the lows here. This is the 129.36. And so where would our stop go? Well, this is really nice here because we have a nice swing high here. So this is where our protective stop would go. So we simply measure from the low to the high here, plus a few pips. So we're at about 42 pips. So then we'll go into our risk dashboard and say that we want 42 pips. We're risking this much here. So now we have the stop at 42. And we have lots of 0.79 lots. So we'll put our order in for this. So we have 79. And our entry is the 129.35 level. And our stop is 42 pips higher than that. And the target, where can we put our target? Well, let's have a look. We zoom out a little. You can see here that we want to get out just around here. So let's have a look here. We have the big figure, which is here. So 127.100, which is a very important area. I think we'll leave it at that. So we'll take the 127 area, and we're going to put an expiry time so it's closed by tonight. So it's the 19th now. The time is 11:26, and so I want this to be done by, let's say, 9 o'clock this evening. Okay, so we're selling at our level here. We'll place the order, and so now we have our trade in the market and ready to be filled. So we'll remove all these Fibonacci levels. We don't need those anymore. You can see here. So here our entry and our stop is above the previous swing high, and our target is just around here. And if we take the Fibonacci tool and we draw from the low here to the high, we can see here that our target is actually at the 38%. So this is actually a pretty good level to take a profit there. But the first thing we want to do is to ensure that, let's assume that price does move in our direction. If we get filled here, we are most certainly going to want to watch these little price nodules as price moves lower here. So we don't want to get greedy. We want to take profit out so that we can fund our stop on the second half of our position when we've reached perhaps 20 or 30 pips. So let's assume that price comes up, we get filled and it moves lower, and we pass this swing low. Then we're going to want to move our stop to be just over the half an hour or the 1 hour swing highs as price continues to move lower, assuming it moves lower. So this is something we're going to want to do. Ultimately, you want to get risk out of the trade as quick as possible, especially when the news comes out. So it's very important that we move our stop to break even, or at least reduce the risk of the trade as soon as it's possible. So, but I like this level. I'm going to put an alarm just here, just to inform you when price gets close to it. And then we'll leave it at that. So we'll have a look at the next one, and this is the CAD Japanese yen. Go to the CAD yen here. You can see that we have price moving down nicely. We have nice yen strength, although on the short term you can see that the strength of the yen has moved below the zero line and is continuing to move a little bit lower. It hasn't passed the CAD line as of yet, but it's certainly moving lower. And so we have to look, are we having any news coming out of Canada today? As you can see, we have a big number out of Canada today at 14:30 GMT +1. So this is a red flag, and so we probably don't want to be anywhere near the Canadian dollar at the time this comes out. But we're seeing a reaction here at the 40 level, and so a move up to the 98.60 level. We could see some kind of reaction, perhaps a move lower before the news gets out. So let's assume for a moment that we like this and we want to take this trade. Again, once we have a couple more closes beyond here, then we'll have a swing low, so we'll be able to draw the fibs. But we'll assume that the price didn't move anywhere lower here, so we could draw the fibs from here, from the top here to down to the bottom here. And you can see here the 38% is here, and we have a demand level here, and you can see it touched here, was respected, and then price went around it here and was rejected higher, and then price broke below it. And we had a touch of the level here before price went lower. So this could be an interesting level for us. It's also a 60 level, which is a nice round number, and so this could be something that we're interested in. Let's have a look here. We can see if we go into the smaller time frame that we'll draw this line in here. You can see the price came down here and it moved through it. What other levels are looking interesting for us? See if they line up with another fibs level. 38. We have another level here, which is the 70 level, which is a little bit thicker, a little bit more conservative. So this also could be a potential area. We have a look at the closes here. You can see that. Yeah. We go to the 4-hour chart and have a look, and what can we see here? Well, we can see that the 38 level is at the bottom of this 4-hour bar, and it goes up quite far and then it moves down quite far. And so looking at the 4-hour chart makes me a little bit nervous about having my order to sell here, because there was a strong move up and a strong move down. And when I see these, I want price to come back and move further into these two bars. I don't like this. I don't think I would feel comfortable selling at the low here, so I would probably wait. And the reason I don't feel comfortable is because I've been burnt so many times in the past when doing it. So I'd wait. So when you see this is normally a warning that something that you should wait for a deeper retracement. As you can see, if we look at this one here, you can see that price went up and then it went down. Price did not come and retest the bottom. It did, but it didn't. We didn't get any big moves off the bottom there. We got 20 pips or so, and then price continued higher up to the big figure, this 100 level. And so I wouldn't feel comfortable selling at the bottom. So this is just another example of that. So I would wait for a move deeper into these bars. And we'll have a quick look and see if something else looks nicer. If we go to 1 hour, have a close look. We have this one up here, which is the 80 level. So the last bullish candle before price was released, you could consider selling at the bottom, like bottom of this wick, which is at the 80 level, which overlaps with the 80% Fibonacci retracement. So I would probably wait for that. I'd be a little bit uncomfortable selling that. Price came down and it bounced and went up. When you have like this huge arch like this, while price can easily come up and touch the bottom of these lows here and continue lower, I wouldn't feel very comfortable about it. Again, you have to have a relatively big stop. And so putting your entry here enables price to feed deeper into this move before continuing lower. But that said, if we look to the left, we can see that we have this price inefficiency which moves lower here. And it lines up very nicely with the 162% Fibonacci external retracement. So this could be an even nicer level for us. So if we draw the fibs from the high to the current low, this lines up with the 70% Fibonacci, which is around this level here. So this is also an interesting level. So we'll draw another line up here. Let's look at the 4-hour chart, see what's going on. And here you can see we had a bounce, another bounce, and price went through. And price hasn't been back to this level since then. So I would probably feel inclined to wait perhaps for this level, or have a small trade when if price comes back to this level here. So we touched on these trades, and we opened a position, and we're waiting for price to come back to our level. And all of this is in line with the strength information for this currency pair. We have yen strength, we have franc weakness, and things are continuing to move in this direction. You can see here as well on the 1 hour that the franc is starting to sell off, which tells us that price may not come up to our entry, but you never know what's going to happen. And again, these trades are trades that you can traditionally hold a little bit longer than the scalping trades. So once you get in, you want to get your risk out of the trade as quickly as possible. Then you want to reduce your risk on the second part, if not remove it entirely. And if you feel that this trade is going to continue moving in the direction towards your target, then you can simply remove your target or move it lower and just trail your stop and place it above previous swing highs on the entire move lower. It's a good idea to keep an eye on the strength readings, as these will give you clues as to what the currency pair is going to do. We want to continue to see yen strength, and we want to continue to see franc weakness, because this will bring this pair lower, which increases the chances of our target getting reached. But that's it for this trading video. If you have any questions, please let me know. Thank you very much for watching.